Hello students. So today we are going to solve two problems on 14 marks regarding the fund flow statement. Students, I am giving you some important tips. Kindly keep in mind. Number one, current assets and current liabilities are recorded in statement of changes in working capital. Number two, non-cash expenses and non-business incomes are recorded in adjusted PL account. Non-current items are recorded in fund flow statement. Students, I repeat back once again, it's very important that you need to keep in mind. You should not forget till we complete this topic. First is current assets, current liabilities are recorded in statement of changes in working capital. Non-cash expense, non-business incomes are recorded in adjusted PL account. Non-current items like share capital, fixed assets, etc. are recorded in fund flow statement. Next. There are basically 4 steps you should keep in mind, students. 1. You need to prepare statement of changes in working capital first. Second, adjusted PL account. Third, if there is a need, you need to prepare ledger accounts like building account, plant account. Otherwise, no need to prepare. And the fourth, you need to prepare fund flow statement. So let us go to the first problem. This problem has come for 2007. From the following balance sheet of M&P Company Limited, prepare a statement of sources and application of funds. Kindly mark in your book, students, if you have with you. Cash in hand is a current asset. Accounts receivable current asset. Stock is a current asset. All current assets will be recorded in statement of changes in working capital. And we have 2 years figure, 2005 and 2006. Land is a non-current asset. Therefore, it will come in FFS. Long-term investment is not a current asset, so it will come in FFS. So 3 current assets we have, 2 non-current assets we have. So current assets will come in statement of changes in working capital, and non-current assets will come in fund flow statement. Now kindly look here, students. Land, last year it is 40,000, current year it is 60,000. So there is an increase in land of 20,000. So increase in land, it will be treated as purchase. So there is a purchase of land. Long-term investment, last year it was 30,000, current year it is 20,000. What does this indicate? It means investment is sold. 10,000 investment is sold. When assets are decreased, it means it is sold. When assets are increased, it means it is purchased. So land is purchased 20,000. Investment is sold 10,000. Next, equity share capital non-current liability, so it will come in FFS. Last year it was 2,50,000, current year it is 3 lakh. It indicates 50,000 rupees shares are issued. So there is issue of shares to the extent of 50,000. Accounts payable is a current assets like bills payable. It's a current assets. It will come in statement of changes in working capital. General reserve, last year 1,20,000, current year it's 1,50,000. There is an increase in general reserve to the extent of 30,000, which indicates that there is a GR transfer. GR transfer is to the extent of 30,000, which indicates that you need to take an adjusted PL account. So students, last brief up, Cash in hand, accounts receivable, stock are current assets. So it will come in statement of changes in working capital. There is a purchase of land and there is a sale of investment, which will come in FFS. There is a issue of equity share capital, it will come in FFS. Accounts payable is a current liability, therefore it will come in statement of changes in working capital. There is a transfer of GR to the extent of 30,000, so it will come in adjusted PL account. There is no adjustment at all, students, no additional information, so no need to prepare ledger accounts. So only 3 steps. First, to prepare statement of changes in working capital. Next, to prepare adjusted PL account, and last prepare FFS. So only 3 steps. No plant account, land account, nothing. No adjustments at all in the question. Let us look into the solution. So student, this is a statement of changes in working capital. We have already worked out some few problems on this. So cash in hand at bank last year 70,000, current year 1,50,000. There is an increase in working capital to the extent of 80,000. Accounts receivable last year 1,96,000, current year 1,80,000. There is a decrease in working capital to the extent of 16,000. As you all know, increase in current asset, increase in working capital. Decrease in current asset, decrease in working capital. So stock last year 1,74,000, current year 2,40,000. There is an increase of working capital 66,000. So total current asset 4,40,000 and for the current year is 5,70,000. Then go to current liabilities. There is only one current liability is called accounts payable. Last year 1,40,000, current year 2,00,000. There is an increase in current liability. Increase in current liability will result in decrease in working capital to the extent of 60,000. Then total current liability 1,40,000 for the last year and 2,00,000 for the current year. Working capital formula, current asset minus current liability, that is A minus B. 4,40,000 minus 1,40,000, so 3,00,000 is the working capital of last year. 5,70,000 minus 2,00,000, 3,70,000 is the working capital of current year. So last year working capital is 3,00,000, current year working capital is 3,70,000. So compared to last year, there is an increase in working capital of 70,000. You can cross verify with the last 2 column total. Total increase is 1,46,000. So 1,46,000 minus decrease, you get 70,000. Students, adjusted PL account. Last year net profit not given in the question. Current year profit not given in the question. There is GR transfer to the extent of 30,000. So total 30,000, credit side fund flow from operation is 30,000. Next, fund flow statements, students. Issue of shares and debentures 50,000. Equity shares are issued to the extent of 50,000. Sale of investment 10,000 and fund flow from operation 30,000. So remaining it's dash because loans are not borrowed, dividends are not received. We don't have decrease in working capital as per the format of FFS. So these are the 6 items that comes in FFS in the source. Issue of shares and debentures, sale of asset, decrease in working capital, dividend received, loan raised and FFO. So these are the 6 items that comes in FFS in the sources side. So we have only 3: issue of shares 50,000, sale of investment 10,000 and FFO 30,000. Similarly, in application side, we need to take 6 items: repayment of preference share, it's not there; purchase of land 20,000, increase in working capital 70,000. Remaining dividend paid not given, loans repaid not given, income tax paid not given. So 6 items in the application side, 6 items in the sources side. Kindly remember, according to the format, if you prepare, you may get the fund flow statement tallied to the extent of 90,000. Now let us go for the second question, students. This problem has come for 2000 14. The summarized balance sheet of Suma Tex Mill Limited as on 31/12/10 and 31/12/11 are as follows. So students, share capital is a non-current liability, FFS. Kindly mark in your book, it will come in FFS. Last year 6 lakh, current year 8 lakh, means shares are issued to the extent of 2 lakh. General reserve last year 2 lakh, current year 3 lakh. It means there is a transfer of GR 1 lakh. It will come in adjusted PL account. 50,000 is a last year profit, 60,000 is a current year profit. So that means it will come in adjusted PL account. Long term loan, last year 2 lakh, current year 50,000, it will come in FFS. It's called non-current liability. So it will come in FFS, last year 2 lakh, current year 50,000. It means there is a decrease in the loan. It means loans are repaid. The loans are repaid to the extent of 1,50,000. Creditor is a current liability. It will come in statement of changes in working capital. Tax reserve is a current liability. It will come in statement of changes in working capital. Land and building is a non-current assets, FFS. Last year 8 lakh, current year 9 lakh, means there is an increase of 1 lakh. It will be treated as purchase. Plant is a non-current asset. It will come in FFS. Last year 3 lakh, current year 2 lakh. There is a decrease in plant, which means plant is sold 1 lakh. Stock is a current asset. It will come in statement of changes in working capital. Bank is a current asset. It will come in statement of changes in working capital. Prepare fund flow statement and statement showing changes in working capital. Students, stock last year 1,70,000, current year 3 lakh. There is an increase in stock to the extent of 1,30,000. So increase in current asset will result in increase in working capital. Cash at bank last year 30,000, current year 20,000. There is a decrease in current asset of 10,000. So decrease in current asset will result in decrease in working capital. So total current asset you get 2 lakh and total current assets for current year is 3,20,000. There are two current liabilities. You have creditors last year 2 lakh, current year 1,80,000. So decrease in current liability will result in increase in working capital. So working capital have increased to the extent of 20,000. Tax reserve last year it is 50,000. Current year it is 30,000. So there is a decrease in current liability. Decrease in current liability will result in increase in working capital. So total current liability 2,50,000 for the last year and 2,10,000 for the current year. So working capital formula, students, current assets minus current liability. 2 lakh minus 2,50,000, you get negative working capital of minus 50,000. So current liabilities are more, current assets are less. Therefore, there results in a negative working capital of minus 50,000. And for the current year 3,20,000 minus 2,10,000, you get positive working capital of 1,10,000. So as you did balancing figure in accounts, total 1,10,000, put the total for the last year. So 1,10,000 minus of minus 50,000. So 1,10,000 total, students, minus of minus 50,000. So 1,10,000 plus 50,000, you get 1,60,000. So there is an increase in working capital of 1,60,000. You can also verify the total in the last column. Increase 1,30,000 plus 20 plus 20, you get 1,70,000. So total increase is 1,70,000 minus decrease 10,000, you get 1,60,000. So there is an increase in working capital to the extent of 1,60,000. Adjusted PL account, students, take last year profit given for 2005. current year profit given for 2006, that is last year current year profit. There is a GR transfer to the extent of 1 lakh. So total of debit side 1 lakh 60 minus 50, you get FFO, funds from operation, 1 lakh 10,000. Students, as I said you, 6 items will come. Issue of shares 2 lakh. No loans are raised. There is a sale of plant 1 lakh. Dividend received not given. Decrease in working capital we don't have. We have increase in working capital. And FFO 1 lakh 10,000. So out of 6 items, only 3 is found in our question. Similarly, application side, there are 6 items. We don't have any redemption of share dash. No shares are repaid. There is a repayment of loan 1 lakh 50,000. Long-term loan is paid to the extent of 1 lakh 50,000. There is a purchase of land and building to the extent of 1 lakh. We have not paid any dividend in our question. There is an increase in working capital of 1 lakh 60,000 and income tax paid not given in the question. So 6 items in the application side, 6 items in the sources side. Total you get 4 lakh 10,000. So students, kindly work out on your own. Any doubts, please contact me. Thank you.